The giants of technology and billion-dollar companies that are part of the Fortune 100 ranking of the world's most valuable companies have something in common. They were all financed by the same fund, Sequoia Capital. You may have never heard of it, but you surely use solutions it helped bring to life. Instagram, PayPal, WhatsApp, Yahoo, YouTube, Zoom are just a few of the ventures that received capital from the fund. Even Elon Musk's SpaceX was solidified thanks to Sequoia's investment. These are only some of the companies that benefited from its support, not to mention other investments that aren't public or well-known. This makes Sequoia undoubtedly the most successful venture capital fund on the planet. However, Sequoia's path hasn't always been smooth. In this video, you'll learn how the company, which has more than $5 trillion in assets, came to be, while remaining extremely discreet, especially to the public. Famous for backing various startups and becoming a kind of owner of Silicon Valley, Sequoia has accumulated a series of successes and a combined fortune worth trillions of dollars. But despite this, most of the time the fund does not succeed. In fact, in 3 out of 4 startups supported by venture capital, the money is lost within a short time. This doesn't even account for investments that aren't entirely lost, but fail to deliver the expected return. Among the companies that went bankrupt are businesses of all types and founders of all kinds, such as the crypto exchange FTX, which disappeared along with its clients' money. Sequoia had invested $150 million in FTX, which also vanished. And FTX wasn't the only case where founders misled the market and the fund itself. Still, over its more than 50 years, Sequoia has achieved excellent returns, having invested in over 1,800 companies, making it the largest financier of Silicon Valley. It all started with Don Valentine, a New Yorker who arrived in Southern California in the 1950s, just as what would later become Silicon Valley was beginning to emerge. The region was developing around the semiconductor industry, and Don began working in one of the area's major industries, which is considered the birthplace of Silicon Valley. He stayed there for 7 years before moving to a competitor, National Semiconductor. There, Don noticed that National supplied equipment to a series of budding tech companies but had never sponsored or funded any ventures. Seeing the explosive success of businesses in the area, he realized there was a great opportunity for investors. His idea was to gather the wealthiest people in the region to create a fund to invest in Silicon Valley startups, starting with the heads of his own company, who rejected the idea. Despite the rejections, Don believed that the semiconductor industry would be left behind and that the real opportunities lay with the tech companies they supplied. Initially, without support, Don began investing in startups on his own, and before long, the mutual fund Capital Group took notice. The fund initially operated only as a mutual fund, but saw the potential for exponential gains from startups in Silicon Valley. However, they didn't know how to allocate capital to these companies. That's where Don Valentine's expertise came in. Together with Capital Group's money and Don's investing knowledge, Sequoia Capital was born in 1972 with an initial fund of $3 million to invest in startups in the region. The name Sequoia was inspired by the ancient tree, symbolizing the intent for the business to last for generations, as it has done. One of the first investments was in a company that would define the video game market, Atari. The fund invested $600,000, which quickly paid off when Warner bought the company. The real value of Atari wasn't in the company itself, but in one of its employees, Steve Jobs. Yes, the legendary Apple co-founder worked there and eventually left to start his own company. To fund his startup, Jobs approached Nolan Bushnell, Atari's founder, offering 33% of Apple for $50,000. Nolan declined but referred Jobs to Don Valentine. Though the conversation happened months later, when Apple was already operational, Don decided to invest $150,000 in exchange for a smaller stake in the company, marking Sequoia's first major investment in Apple and a massive win for the fund. This success was followed by many more, including investments in Electronic Arts in 1982 and Cisco in the late 80s. Cisco, desperate for funding, gave up 32% of its business to Sequoia for $2.5 million, a deal that would later generate massive returns when Cisco became the world's most valuable company in 2000. Over the years, Sequoia expanded its investments globally, moving into India and China, with notable successes like Alibaba and ByteDance, owner of TikTok, and dominating the mobile space with investments in Airbnb, WhatsApp, Instagram, and Zoom, among others. Though Don Valentine passed away at 87 in 2019, his legacy continues. Sequoia, true to its name, has thrived for more than 50 years and currently manages over $5 trillion in assets. Did you know about such a powerful business? What other companies would you like to know more about? Share your thoughts in the comments.